Be here.
Thank you, thank you. Dude, this is an amazing story. Like, this is going to be, I want to see how this is going to unfold. As we were talking before the show, is, to be an engineer and then to like, where we're at in the marketplace right now, not only are you've funded all your deals, but you're also very vertically integrated where you're doing the asset management and you're doing the property management of your assets as well.
Yeah, yeah, absolutely. So, yeah, we own asset management, property management, construction, and money raising all
So give me
ourselves,
your
right?
general story, then we'll dive into some how you raised some money. But I need to understand how you kind of got your foot in the door here.
Oh, cool, cool. So I was working as an engineer. I mean, 22 years in corporate life, and always want to try something different, right? So when I was small in college, I was trying different businesses, and sometimes engineering can be boring because you're just doing the same product or different variation every year, right? I mean, unless you're an R&D, creating a rocket science, products. Most of the products out there, which is working on engineering, is it's a reuse, right? Because that's how businesses make money. So it becomes pretty evident to me that it's very monotonous to me, and I always want to do something different. So we have tried different businesses. My wife and I, we have tried different businesses, and finally we settled on real estate. We started with single family houses in 2013. Bought like what 13 houses, and we flipped that. We still have a few of those. We sold most of it. We refinanced a lot of our houses, moved into a 45 units apartment, and from there we just have like 1700 units right now in multifamily.
1,700 units, right? That's pretty
Mhm.
cool. And
Yep.
so, on your journey to get those 17 units, like, how did you start raising the money to get those? Because that's on 1,700 units. That's quite a few projects. What is that, like 9 or 10? How many projects is that?
We have 9
Nine
projects.
projects, right?
Yes, yes,
And
correct.
so, I mean, your average raise on a deal has got to be 3 to 4 mil.
In the beginning, we started small. My first deal is only 450,000, right? It's only 45 units. But the last one we did, which was a few months back, is $10 million raise,
Right?
and we raised it, and we raised it in 1 week,
Attaboy! Hold on,
all on our
my
own.
pen just got sharpened. I'm going to take notes for myself.
And there's no real secret to it. I mean, the biggest secret is you have to know what you're doing, right? I mean, most of the true investors. I'm not talking about the general people that you meet in meetups or Facebook or LinkedIn, the people who already know real estate, already know a lot of syndicators. These are the people who want to be like you, who they want to be syndicators, right? But there are a lot of people who are truly passive, who really want passive investment. They want someone to really know what they're doing, right? And the people who know what they're doing are most of the time are operators, right? People who are underwriting deal, defining business plan, executing business plan, and communicating directly with them. So when you do all that, and at the same time you do a damn good job on your first few deals, and you start seeing giving returns to people, you have a good track record, and people just keep on telling others, right? And that's how we got started. That's how we raised money. And in most of my investors, I have only like 220 investors out of $35 million. That's like almost 140,000 per person,
Wait, hold
right?
on. Where are you at? Are you in?
I'm in Austin, Texas.
Okay, that's where all the money's at. Come on.
No, that's I I probably have like one investor from Austin, right? Everybody else is from Houston, Dallas, California, and all over the country,
No, I
right?
get.
So
Yeah, exactly. It's.
I need to do a better job in Austin. A lot of people doesn't know me in Austin,
It's
so
so
but
funny. I look
mhm,
at because we raise money all over the place too, and I always say
uh-huh,
like, how come I just don't have a large Phoenix base of money? And like
uh-huh.
2020, that's what we're gonna try to do is just find a local group, see if we
I
can
know.
raise money locally because we would love to do some galas and some things like just to shower
Hmm.
our money people and do some things, right? But
Yeah, yeah.
just like you have investors all over the country, right?
Yeah, all over the country and very less locally. So I probably need to do a better job going for meetups here and meeting people and just introducing myself. I mean, we're just so busy operating the deals. I mean, since we are vertically integrated, we are just busy, making sure we are able to turn around properties, making sure we're able to give returns to our investors, and just word of mouth, just how it spreads, right? And people like to give money to someone who they got a referral to, rather than just some random guy who they met on a
Are you
Facebook
asking
or a
for
meetup.
referrals, or how are you, I mean, how does that really go about? I mean, is there
Um, Well, I mean, people, no, I don't really ask for referral, even though now recently I've started just because people always come at the last minute, right? Once I have a deal, then they say, hey, my sister want to invest, my brother want to invest, my friend, and I say, oh, no, this is 506B. No, you can't do that. I need to know them ahead of time. So now I'm telling them proactively, whenever I close a deal, now, if you have someone who want to invest, let them have relationship with me right now. Start building that relationship. So I've started doing that right now. But I mean, just word of mouth, just it spreads very quickly.
yeah, I think word of mouth is absolutely that. Now, did you just really start out with your warm market with the people that you know? Like, I always feel like, a lot when people listen to this podcast, because I have an eclectic group. I mean, I've got investors that have been doing business. I've got new people. I've got a little bit of everything. So, like, and you've been running the gamut here, so we can kind of talk to each group a little bit. Like when you
Sure.
first started, what did you do, and then what do you do now that's way differently?
I think when I first started, I mean, since we were doing single family home, we don't have to raise money, right? Because we were doing single family home. But what we did with single family home, we start telling people on what we do, right? So at the same time, we use unconventional method to finding deals. So we were finding like the first few deals we found is like an awesome price, which is unheard of in the market, just because we were doing our own marketing, prospecting to direct sellers, and we got really, really good deals. And the first raise was only 450,000. We raised it within 24 hours because it was an awesome price, and we have a good track record in single family, which we told everybody, right? So the key learning is when you want to start raising money, you have to tell people what you're doing, especially when you're really good at it. And if you think, you are going to be honest enough, and I mean, you always going to be honest, right? You're honest enough and
Right.
do a good job in your deal. Tell people that you're doing this, tell people the successes, and that's how you raise your money in the beginning,
Yeah.
right? And now it's just word of mouth, and we use our email list to tell our accomplishments and make sure people know. And now
So
we
you're
tell
following up
people.
with emails. You're
Yeah.
now you've got more of a nurture. We'll call it a nurture campaign where, you know,
Yeah.
and plus they're already getting your reporting and things like the communication from the
Yeah.
deal. Now, do you have a portal? Are you using like an investment portal of any kind?
Yeah, we do have an investment portal, but I think investment portal is not what you call a holy grail of raising money, right? I mean,
I think it
I think
sucks, right?
I don't know. It's just a software, right, for you to. I think the key thing is when people want to give you money, especially when they want to repeatedly give you a lot of money, is because you are directly dealing with them and you're over communicating with them. And people want to make sure their money is working and someone is being responsible, someone trustworthy, and you want to add a lot of value to them. Like I do a lot of value add to my passive investors, right? So I do webinars for them. I do, like, today we have a tax investing a tax benefit webinar for passive, which we have like 300 people registered, right? So I can tell you, out of 300, probably like half of them or maybe 60% of them are new, right? But so when they come for this webinar, it's just a free information. We just give it out to them. It builds the trust, and get they get to know you, and you adding value, free value. So just keep on adding free value, right? Like this podcast, right? A lot of people are going to be listening. You adding a lot of value. People know Corey, and people know me, right? So it's just you have to be known, right? And
Isn't
know your
raising
subject
money,
matter.
you find it's personal,
It's very personal.
right? It really is, right?
Yeah, yeah, correct. I mean, I know a lot of money raisers out there. I mean, they have thousands of units, even though they're a small percentage of what they own, right? But they have to use a lot of capital raises to raise money, right? Because they keep on buying very quickly, and these capital raises, they go into their network and get the new people. So the new people knows the capital raises, and capital raises know the GPs, right, or the sponsors. So it's all very personal.
It is, and not only this. So, and I love the way you're doing it because you actually are like how I want. This is really trying to how I structure my deals. More
Hmm.
often than not, is you're the GP. You're the
Hmm.
only GP. In other words, you have passive investors, and you're going out and raising the capital, and that means you get to own most of the deal,
Most of the deal,
or like
yes, yes.
your portion of the GP is all yours.
Correct. And of course, my wife as well, right? Two of us, right?
Well,
But
yeah.
the other benefit that we people see in us, we are vertically integrated, right? So you have one neck to choke, right? So a lot of times when deals, I mean, a permanent investing, the hardest part in a permanent investing, as I mentioned in my book, is actually property management, right? I mean, if you're managing like 300 units, you have 300 income stream. Managing a 300 income stream at a class B and C with 16, 17, $20 an hour pay employees, very hard, right? So property management is the hardest part of multifamily, even though a lot of people don't see it right now because market's very strong. As I said, the property management company is not the strong point. It's actually the market is strong, so you may not see the bad part of the property management. But once the market subside, a lot of property management will be undressed,
The
right?
cracks are going to show.
Yeah. Then
Everybody,
they said, oh, then people realize how bad is their property management skills, right? Then you need to do all kind of martial arts to keep the residents in house and reduce the turnovers and all that, right? So
yeah. So what you're saying is not only are you raising the money,
mhm.
you're asset managing your properties, and you actually are. Those are like three different companies, by the way. In
Yeah.
a way, you
Yep.
have what you do, which is probably raise money. You have people on your team that are paying attention of your assets, and then you actually
Hmm.
have your own asset management or management company that you own, which
Hmm.
is you're trying to really control the product from start to
Hmm.
finish.
Yeah,
And I
yeah, and
commend
I
you on
think
that
that's
because that's not easy. I want
it's not
to,
easy.
but I'm like I'm not there yet. Like there's the time that I might when it
Uh-huh.
makes sense, but like the thought of having to manage properties scares the living crap out of me.
It is very scary. I mean, that's why right now, I mean, we are trying to build our leadership team and we're working hard on it. I mean, because we have grown so quickly,
Yeah.
so big, it's getting too much on us. So
But
we are
right
trying to,
now it's not a bad time because it's hard to find deals. We were talking about this earlier. It's right now
yeah,
it's hard to find deals. So maybe it's
yeah,
good to fix the house, right?
correct. Yeah, it's good to really put in structures and process right now because you can't buy deals quickly right now anyway, right? There's not many deals, even though there are deals, people are doing deals, but most of the deals are marginal,
They
right?
suck. Yeah, most of the deals suck, right?
Yeah, what's the point of rushing,
And
right?
there's because the new buzzword has been everybody's coming into multifamily.
Oh yeah,
I
everybody,
mean,
right? It's also
and I'm an educator, so I'm helping put them all there, right?
yeah.
But
Well, I mean, there's also the social media effect, right? If you see, the social media has exaggerated the FOMO effect, right? Fear of missing out. When people see somebody else is closing deal, and 100 people saying congratulations, everybody feel like they missed out,
yeah,
right? So that is creating a psychological optimism in the market, which is dangerous.
right, yeah. Well, which is meaning leading to a lot of people buying stuff that they shouldn't. And
Yeah.
when the market changes just a little bit, they're going to hiccup, and like you said, they're going to be naked and they don't even know it.
Oh yeah. Market's already changing. I mean, I don't think so. It's out. It's far away. I mean, it's already changing. I can see some deals which is underwater. There's a lot of deals being done because of interest only loans, and everybody's assuming 2%, 3% rent growth. But only the top markets you can see 2 or 3% rent growth, right? And just because of the bidding war that
James,
brokers are creating.
that's a great thing you just put up, right?
Mhm.
I don't want to stop you, but
Sure.
because I believe in this. People underwrite. This is what we're talking about underwriting, but like
Hmm.
2 to 3% rent growth. I mean, I 2 or 3, but I've seen people that are like 4 or 5, like they're just putting these multipliers in there that you're like, how in the hell are they doing that?
Yeah, I mean, some cities are having a short-term huge run-up, right? But if they are doing 4 5% for 5 years, that may not be realistic.
Yeah,
Um,
but I mean,
I mean,
I
yeah,
agree. I agree with what you just said. I just think I wholeheartedly people are over predicting what that future rent growth is always going to be there, even
yeah,
in strong markets. But like, listen, what happens if it doesn't?
yeah, correct. And also keep in mind, so there's 3 or 4 factors that brokers, right? When you buy through brokers, whether on market or off market, is the same, right? Even off market, they still do bidding. Off market, right? They just make it sound cool to say off market and get people to get interested, right? So on market is worse. Now they have a best and final and best and final. So you're already buying at a high price, right? So your price entry price is high because now you want the deal, but you already overpaid for it, right? Compared to everybody else who believe in the
Right.
underwriting. So first of all, you bought it very high. Second is you're making all this assumption on the rent growth and all that. Third, your loan come in. Either you do a bridge loan or you do a Fannie or Freddie, which have IO loans, right? So all the loans are being very, very favored for a few years, right? Unless you get a 10-year IO, right? Or you know you you get a very, very long term hard loan kind of thing, right? So your all these three factors is going to expire, right? Your IO is going to expire at some point, your rent growth is going to slow down, and you already overpaid, so your entry point is high, your rent growth is may not be realistic, right? Not for many years, right? Maybe for a short term, and depends on the city. And the third is your IO is going to expire at some point, right? So at some point somebody is going to fail, right?
Right.
So all
And
of them
this
are
is
going to fail.
why operations is so vital, right?
Yes, yes. So if you look at the market cycle, right, you have first you have four market cycle. One is called recovery, which is the bottom left, and on top of that there's expansion. So we are actually already past expansion, and then so on the bottom left we have a recovery. On the top right we have expansion. On the top left we have expansion. Top right we have hyper supply, and bottom right you have recession, right? So if you look at studies published by Dr. Glenn Mueller, who's a PhD. He's been doing this for like 30, 40 years. He's a professor who studies like 50 different data points of where the market is. We already like apartments more on the hyper supply side, right? So I mean, of course it depends on the city. Some cities are still on expansion, some cities are on the
Right.
hyper supply,
The
right?
ones
So
where all the California people are moving into.
no, well, yeah. I mean, I have it in my Facebook group on the chart, that the latest chart. But what I'm saying is, we already like have a lot of expansion
I
runs,
agree.
and
It's been good for a
and
long time.
it's a good for a long time. Prices has been way up so much, and the wages have grown so much, right? I mean, at some point the corporate profit is going to come down. They can't pay so much to everybody, right?
Right.
So the wage growth is going to slow down, which means the rent is going to be limited by wage growth, right? So you're going to have a slowdown at some point.
Now you had a new book, a fairly new
Mhm.
book that you had just come out in February. What's it called?
It's called Passive Investing in Commercial Real Estate: The Insider Secrets. That's the only book out there for passive investors. It talk from passive investor perspective and gives you a lot of details.
Why did you write it? What was your intent on writing that book? And
Because the reason I wrote that book is because I see a lot of passive investors. When I started in 2015 in my multifamily, 2013 I started with single family, 2015 is multifamily. A lot of passive investors think all deals are the same, all multifamily deals are the same, right? Because there's not much of information on how to evaluate this private syndication,
yeah,
right? So I mean, stock market, you Google stock market value versus growth versus but opportunistic stock market, you'll find a lot of article about it, right? But not in multifamily, how to evaluate, right? And that's what the information that any passive investors need to know, right?
yeah.
And and a lot of information are being taught like as though it's exclusive information. So a lot of clubs are charging 20, 30,000 for passive investors to know. And I always wonder why passive investors need to pay so much of money, right?
I
To
mean, when
know
you
what
got the money to
passive.
invest, why do you got to pay to be in
Yeah.
a club to be able to invest in deals, right?
And you want to be passive, right? So passive investors, passive investors need to know, how to select deals, how to select sponsors, how to select markets, how to diversify, what kind of cash they need to use. So these are the things that passive investors need to know to make a very smart decision in investing. So I wrote the book because I see a lot of my passive investors were investing everywhere
You're
as
trying
though
to
it's the
help
same.
educate them so they don't lose in other investments and they understand what they're doing. You're trying to
Yeah.
educate them to like, here's what we think is the right way to look at things.
Yes. Yes. I mean, because
Because we know the bad and the ugly too.
bad and ugly, we see a lot of it as a sponsors like you and I. We know the bad deals and the bad sponsors. We know it because at our level we can see a lot of things very clearly, right? But not for passive investors.
No, because
So yeah, I
they
only.
have limited information already,
Yeah.
and they got to really understand. They're really you're teaching them how to do due diligence on the deal itself and the sponsor and the syndicator.
Correct. Yeah, absolutely. That's what it is.
Yeah, no, I think that's a great book. That's in fact we're gonna make sure we put it in our show notes because
Yeah. Yeah.
can you get that on? Where can you get it at?
Oh, it's an Amazon. We have Audible, Kindle, and a physical book version. We have sold thousands of it.
Did you do
A
the
lot of
Audible
people.
yourself, or did you pay someone?
I paid somebody. I don't think so. They want to get my accent, so
I would still like it. Come on, brother.
no, no, no. I got a professional narrator to read the book.
I'm actually going in the studio in I think right after Christmas to
Oh, cool.
record my book, Copy Your Way to Success.
Oh,
So,
okay.
um, and at least I'm going to try. I might come out of it saying no, no way,
Uh-huh.
but I'm going to give it the college try to see if my voice does it.
Uh-huh.
But
Uh-huh.
maybe or maybe not.
Yeah, I think reading it yourself gives a really good, unique perspective. But I think there are some other regulations, right? Like Amazon has certain requirement for their Audible version, so you
Yeah.
want to check on that and all that.
Yeah, exactly. Cool. So, to go from like in 6 years, that's a pretty good run. Um, but it's not like I don't think that's just like you've just go and just accelerated full fledged on the gas. I mean, 6 years, 130 million. That's actually a decent, just nice kind of growth. Don't you
Yeah.
think?
Yeah, yeah, very decent. I mean, first 2 years out of the 6 years, we did single family, and the last 4 years, 2050, yeah, last 4 years, out of the last 4 years, the first 2 to 3 years, we only did like 300 units.
Yeah,
The last 1 to 2 years, we did almost 1,000 units, a
yeah.
thousand something units. So yeah, we accelerated in the last.
I stopped counting units, but just for me, I was like, dude, I do projects. Right?
Yeah, that's
Because
interesting, right?
because yeah, because I was like, who cares about the units? Like, if that's
Hmm.
it's a nice thing to say. And it was like, how many units you got? Like, it really matters, right?
Yeah.
A better thing
Hmm.
would be how much NOI do you make, or how
How
much
much? How
net
much
profit.
net profit or returns you're making? Yeah, you're right. I mean that's one thing I wrote in my book too, because people are misleading the public or new passive investors by giving them a big count of units, especially people who have invested as a limited partner as a passive. They're going to invest 50,000 into a 300 units, and they claim the 300
I
units.
got 300 units. Oh, dude, listen, yeah, I've got a portfolio of, listen, and I get it. I mean, theoretically, it's correct, but that's why you got to know this, right? That's what that book's
Yeah,
for.
correct,
Is
correct.
how
But you
many,
can't claim like you own one stock of Google saying that you own Google, right?
right? Yeah, I own Google, but
In stock market, it's so easy to cash that, but not in apartment, because people just don't know where does that come from, right?
yeah, but I find it very interesting that you're controlling your whole product. I really think that is, I think this is. I've always now listen. I've taught like for me, I'm like, dude, all the last thing I'll ever do in life is manage my own properties.
Hmm.
But I'm telling you, my opinion is starting to change as the market is like as I really start getting into different other management companies managing different properties. It becomes eclectic that you're having to speak, Farsi over here, and then you got to speak English, and then you've got German, right? Because you got all these different management companies that speak and different softwares, different
Correct.
systems, and sometimes you're like, dude, I just want to control the mechanism so we have one product, one culture. That sounds to me like that's what you're building.
Yeah, yeah, that's what we're building. I mean, keep in mind when you do your own property management, you're going to slow down on acquisition because you can't do both at the same time. But as I said, there's not many deals. There's not many good deals anyway, right? I don't think so. There's a lot of deals out there anyway. So you rather focus on property management
What's your biggest
and
mistake that you think you've made right now? Like so, like out of your journey so far,
mhm,
like what would you not do?
mhm. We would not do property management, but we will also do property management. It's a lot of hard work, the property management. I mean,
God, I'm
90%
just
of my
glad you
time.
said that because it.
Guys, 90% of our time, Shanti and I, my wife and I's time goes into property management, right? So as a result of that,
You'll fix it
we
though, because that's just really just adding people,
adding people.
the right people to, and as you get more and more units, you can then hire that one, the one big person, and then you got to, it's, but that's hard to give away
Yeah.
that trust, right? Because that's culture.
Yes.
and
Yeah.
all that
I
stuff,
mean, it's
right?
still a hard, even though you own it yourself, it's no free ride. It's still a hard job.
You don't even make. Do you make money in the property management company?
No, we don't really make money out of
All
it.
right.
So,
So I want everybody to take that note, right? Understand, in property management, you don't make money, right? But it's not
mhm,
there to make money. It's there to control the
mhm,
product. I think.
correct. Yeah, especially when you're doing value add. Well, that's value add is the only thing that makes sense, right? In commercial real estate. I'm not sure why people buy A class in a really good location just to park money, right? So not my business model, but we do value add, especially value add. You want to control how fast you can turn around a deal. And we usually turn around a deal within 6 to 8 months on a value add deal. And these are really good value add with really good upside, right?
Right.
So you can do that if you have your own property management company. If you don't have that, you're relying on another person,
Everything gets
you always
slower. It gets
everything gets
way
slow.
slower.
Yeah. And also property management company, they do all kind of weird stuff. I mean, they move around money, because different properties, different property management company, they do all kind of stunts.
They're all trying to steal your money some way or some
Yeah.
fashion.
The money moves around everywhere and you do not know what's happening. I mean, eventually you will have your money,
That's
but
why you have an asset manager to like. So that was the first step. Like I think,
uh-huh.
looking back at it, right? So asset manager. Do you like?
Mhm.
I mean, what's their job to your deals?
Well, right now I'm doing my own asset management. I need to somehow delegate that at some point. But you can. I mean, because we control our own bank account and everything, and how the money flows, so we can see everything. I hire a lot of people from outside property management company at a senior level position, and they keep on telling, "Oh, okay, so you guys are not moving around within different properties." I said, "No," but that seems to be a common practice in the property management world. They just move around within different properties.
Yeah, well, that's bad because especially if you're syndicating,
Oh yeah. I mean,
right?
you do
You're
not
not
know
supposed to
where
do
your
that.
money going. Yeah, commingling money with other properties, right?
Yeah,
So
but it's rampant, right? It happens a lot,
it happens a lot.
right? So, um, what else? So in the run up to 130 million, even though it
Hmm.
sounds like that number for a lot of people may frighten them, but I mean, like you
Hmm.
just said, it's 2 or 3 deals a year, and then with
Yeah.
you had a pretty good last year. I mean, we had a pretty good 2018. Like we
Hmm.
bought $25 million worth of property, so
Wow.
3 projects,
Hmm.
right? But 2019, I've only found one deal,
Yeah,
and I
that's
consider
okay.
myself lucky.
Yeah, absolutely. I mean, as I said, there's not many deals out there. I mean, if you're buying like 5, 6 deals per year, you're most probably buying marginal deals. There's no such thing as brokers are just going to give it to you, the best deals out there, which a lot of upside. First of all, the brokers have to convince the seller to give the listing to them. And to convince a seller to give the listing, they have to quote them high prices on their BOVs, right?
Yep.
Broker price opinion. So they already like pushed up the price to the seller. And then now you go into the off market, on market bidding process. So you're pushing up the price again, right? So the price is always very efficient, right? You're always buying it at high price
Yeah.
right now.
But
So
right now, there's lots of money wanting deals. And so we have
yeah,
money
mhm,
chasing, like,
a few good deals.
yeah, the deals. So, I mean, I think there's an oversupply of money, but I think that's going to flip eventually.
Yeah, I think there's oversupply of money. Absolutely, that's where there's so much capital looking for deals, right? And the banks are still giving out loans, right? But I think there's a lot of people who are making mistakes because of that. People have taken the relaxed approach of underwriting, and
Or picking the
and
wrong
there's a lot.
sponsors that are losing money. Because I just know, I mean, I know of a couple of deals that have blown up that are some other people that were doing, and I'm like, dude, those people just lost their money.
Yeah,
You
I mean,
know?
I know a lot of them
Oh,
too who are
gosh.
underwater right now. They're losing like 5% to 10% of their deals because market is strong. So imagine the market slow down,
Oh,
and people who are losing money at this stage of market, they're going to lose a lot more money later on, right? When there's no buyer to really buy.
yeah.
So it's okay not to buy deals now, because it's how the market is, right? I mean,
That's good. That's good advice to be patient, right? Only find good
yeah,
deals.
find good deals which you can execute. I mean, as I said, how did we raise so much money, from on ourselves is by doing really, really, really well in our first few deals, and we returned a lot of money to our investors. People are so happy. And if you consistently can do that, you can keep on raising money. And we are here for the long run, right? Not for the short run.
Yeah. Yeah, exactly. Now, what do you say as far as when you look back at what you've done so far, your knowledge so far? What's some of
hmm
the best things that you've learned to do? Best tips.
Best tips is be patient, right? So, oh, some of the best tips I can tell you, right? So I don't really buy deals which is email blasted, right? Any deals come to email blast, I don't even look at it. If a broker call me saying that there's a deal, I will ask him why me, why are you bringing this deal to me? If you can justify to me, then I will look at it. If he can't justify to me, then probably no. Because I mean, there must be some reason why they want to give it to an experienced person, right? They might go to the newbie and price it high and sell it to them, right? So because they'll make the seller happy and they'll get higher
Dude,
commission,
that's a
right?
great little chunk of wisdom, right?
hmm
Because now you didn't start off being, hey, I've bought something like in the beginning, but like once you get some credibility, you're wanting the brokers because all the good deals get done through a phone call most of the
hmm
time. When a
Yeah.
broker, hey, he has this short list, you
hmm
got to be on the short list,
Absolutely.
right?
Yeah, yeah, on the A class. So if on the A list, I guess, from what they say, right?
Yeah,
So sometimes they tell you you are the best buyer for this because there's a property in front of it. We want quick closing. We do not want to take it to the market. Okay, that's a really, really valid point, right? Because taking to the market will take 3 4 months, and they might find some newbie, out of a boot camp who putting the deal under contract and dropping it and doing all kind of things during due diligence. So they don't want to go through that. So if the broker can really justify why I am the best buyer, then I'll definitely underwrite it, right? So for the past 8 months, I only underwrote like 3 deals, and I did one of it,
yeah.
right? So it's okay.
But no, I think that's good. I look at it the same way. I mean, today we did one deal this year, and that was a great year. We had a great year, right? Next year
Yeah.
we'd like to do 2 or 3 deals. That's my goal,
Mm-hmm.
is to do 2 or 3 deals a year. And whether they're big deals or small deals, I don't even care about, like, some of them are big, some of them are small. We just want to do good deals,
Good deals. Yeah.
right?
Yeah. I think it's important to keep on doing good deals. If you do not want to get stuck in the correction that may come anytime.
Yeah, yeah, I totally agree. Um, what else? Give me another good nugget that you think that people should listen
Good
to.
nugget is interact very diligently with your investors. I respond to all my emails on my own, right? I don't believe in delegating that function to anyone because I think the investors are believing in you. And I'm very good my email. I mean, anybody send me a mail, they'll get a response,
Yep.
right? So that just build that personal relationship with all my investors,
Yeah,
right?
because
So
they
they
know that you're
know.
running the ship. They already know you're busy. Most of them already know you're busy. So
hmm
when you call them or you respond to them, they're like, "Wow," right?
hmm Yeah, I'm getting a response from the guy who's running the show, right?
Yeah.
So yeah, once you start delegating and all that, it becomes very muddy in terms of
Do
who
you
am I
have
dealing.
anybody helping you set, like, for new appointments, new people that you're going to meet, right? Does someone
Right now,
help you do that in the beginning, or and then
no.
set you
Right
up?
now, no. Right now, no. But I probably should get one. Right now, I just
We
use
just started doing
Calendly.
that.
Good.
Because
I
I
think
was
it's.
like, oh, I just need you to get everybody. I told my wife, I was like, listen, I need you to talk to everybody beforehand and
Uh,
start that relationship process, and then bring me in the end when we're actually, like, when we have a deal. Like, I want to do that conversation one on one with them. We're ready to, like,
mhm.
explain the deal and get their money, right?
Got it.
And then
Got it.
I'll take kind of the handoff from there from there on. But I'm like, that was one of the things for us that we just changed, and because, listen, when you start getting lots of investors, it's a lot of time, and then you're only, you're doing a property management, all the other stuff too, right? It's
Yeah,
like
yeah, we are like we are
you're a
doing a
master
lot of
juggler.
things. I know. So yeah, we are trying to structure our company to be much more efficient. So we are trying to
What's
hire some corporate staffs and all that.
what's your end game, man?
So I do not want to say that we want to build like 10,000 multifamily units, 20,000, because I think that's a bit short-sighted, right? So for me, it's more about finding that opportunity in any asset class, right? So is there any asset class which can be better than multifamily? It may not be, there's also risk adjusted returns, right? So is there what asset class has low risk, but lower return as well, but the risk is low compared to multifamily, which has a long run, higher risk, higher return, right? So for me, it's figuring out the next, the next move is always important and challenging for me. But so I don't want to say like 10,000 unit, 20,000 unit because it forces me to buy deals that may be not good.
I agree. I agree. But now, what about? Do you think you'll always syndicate?
No, no, I'm not going to always syndicate. I think at some point we are going to buy ourselves and start doing it ourselves because syndication has a lot of pressure. I mean, most of my passive investors are really good people. I mean, they have a lot of trust in us and we work as a partnership. But, it also always a heavy burden, right? Heavy responsibility on your shoulder, right? That
Yep.
you have to take care of somebody else's money and, and
That responsibility is real, isn't it?
yeah, it's very heavy. So we always worry about their money. I mean, yeah, getting rich is
This is
fine,
millions
but
of dollars. So this is people that are listening to this. This is what I don't think anybody ever really discusses. I'm glad that you're sharing it and being very honest and truthful about it
uh
because the weight of millions of dollars of other people's money on your shoulders, counting on you to deliver a return, is
mhm,
real.
it's real.
For the right
Yeah,
for people that for people that care, you care.
yeah, yeah. I mean, I can see the completely different mindset when I have my like 13 single families. All my property, sometimes one tenant doesn't pay me my rent, and I don't care. Yeah, we make still money. It's all my money. I don't even have a P&L at that time, right? But now with the syndication, with investors where we share monthly reports, we're always being diligent. And every morning I wake up, I have to make sure every property is performing because I don't want to think that some passive investors thinking negatively of me. So there's a lot of pressure in terms of making sure that we take care of our investors because we are managing their money, right? And
Yeah, it's a big
people
responsibility.
people work hard for all this money, and we do not want to play with that. And we want to do a really good job. We want to have a good reputation, and when you die, you want to die peacefully,
Yeah,
right? So,
man. Yes, right.
so
Man, I
yeah,
love that you're being just so honest about it because I think so many people just brush that off. But you're really communicating in a very, I think the way a syndicator should communicate is you can tell that that's a real deal for you, right?
yeah,
And it
mhm,
should be. I think it because if it's not, you're not doing your money justice, right?
correct,
Because
correct.
it's that type of responsibility. But I love
Yeah.
the fact that you just said that because I have the same goal as well is eventually to use all my own money,
Mhm.
right? Which
Yeah,
I
we want
think
to
is the
create
end goal.
generational wealth for ourselves, where we risk it ourselves, and we do everything on our own and use all our skills
What
and
do you
we
think?
build
Another
for
5 years till you get to that point?
No, I'm starting to do it in the next few years already. I'm
Yeah,
starting to
as
buy
your deals
deals.
mature, right?
Yeah, yeah. As I have money, I probably buy deals on my own and start flipping them. I can take a lot more risk with my own money. Right now, I've reduced a lot of my risk by doing like Fannie and Freddie Mac loans, which is a lower risk. But if I own money, I can do all kind of flips, right? So
Yep. Well, so I love that concept too, is because sometimes it's like you know I always look at it. So when I go sell a deal that I've held for quite a long time, you can make a lot of money on that. So I'm like, okay, I'll take my money and I'm gonna go find my own deal. Just
mhm,
with me, Corey Peterson's the only investor and the only GP. It's just my money. But
yeah,
then the other part of me says I got to find two deals because I still have my investors sitting there saying, "What about me, Corey?"
yeah. No, I mean, I think it's a lot of investors. They think of us as the guys who are going to make them money, but they're also investors who think that we are taking advantage of them, right? So I mean, I prefer investors who want to be partners with us, and almost all my investors are partners. They don't really disturb me because we do a good job
Yeah, we do good
giving back
business, right? You do
returns.
good business to
Yeah,
everybody. Yeah,
yes. But I always believe like, hey, what about if market crashes, right? What do I do with that? I mean, I have to go back and explain, and people will understand if the economy goes down and you got no control, I guess. But it's just a burden in your shoulder, man.
no, it really is. So yeah, that's a good. So that's the good, bad, and the ugly of syndication, right?
Yeah,
It's
yeah,
great
yeah,
because you learn how to use other people's money, but it's bad because you learned how to use other people's money, and the weight of that is a real weight because there's a real responsibility to it.
yeah, yeah. And that's another reason why we did this vertically integrated company because we want to have control. We do not want to go and tell to our investors saying that, oh, that property management company is bad or this property management company didn't put the right. So we to control everything. End of the day, we take the blame or we take the credit, right?
Yeah. Now that's great, dude. Listen, that's a great show, dude. Great, just really from the heart. I mean, I believe that. That's I love when people just share openly, honestly, of
Yeah.
what they're doing because some people are not as open, and this there's no secrets in this business, and
Mhm.
you'll eventually get found out if you're doing it wrong.
Yeah, as I said, people, most of the passive investor will see through you very quickly when you talk to them. And if you do not know what you're talking about, if you just want to be like a capital raiser, and if you are just like a small GP in a deal, and you do not know what you're talking about, people know that you do not know what you're
They'll
talking
figure it out
about.
pretty quick. Yeah,
Yeah,
yeah.
yeah, correct. So
Good, James. Listen, how if people want to, we already talked about your book. If people want to figure out more about you and how would they find it? How would they get hold of you?
I have many ways to get hold of me. My email is james@achieveinvestmentgroup.com. Achieve is like achieving a goal. Achieveinvestmentgroup.com. My website is achieveinvestmentgroup.com. I have my own podcast called Achieve Wealth Through Value Add Real Estate Investing. I need to get you in that, Corey. So
Yeah,
I
yeah.
interview operators.
Hey, well,
So we can go deep into the details, right?
yeah, man. Yeah, I'll get in the weeds with you, brother.
Sure. So it's Achieve Wealth Through Value Add Real Estate Investing podcast. And I'm in LinkedIn, Facebook. We have a large Facebook group, almost 4,000 members, which is with 43 rejection percent ratio, right? So we have 4,000 people, but 43% of the people who applied is rejected. So we almost have like 7,000 people if I don't reject anybody,
Yeah,
right?
yeah,
But
I got
we
you.
reject a lot of people. So it's called Multifamily Investors Group, right? Multifamily Investors Group in Facebook. You can definitely find me there. I'm very active in my Facebook group
Cool.
and my LinkedIn, James Kandasamy.
Awesome. Well, listen, thank you again for your time, coming on the show, and just sharing some of your nuggets, your wisdom, and really, I love your full integration of what you do, and really, how you've taken on the approach of multifamily investing. And at the end of the day, I think you care. I think that's important,
Yeah,
right?
yeah, absolutely.
Guys, listen, if you're listening to this podcast, as always, success does not happen by accident. It is predestined, it is determined by your belief, right? It has to start with what you envision, because if you believe it, you can achieve it, and your paradise is possible.